Welcome to Friday. You can fry an egg or you can fry your brain. Welcome to Friday.
Oh, hey, happy Friday. Hope you're all doing well. Let's dive into an outlook. See what's going on for pound US dollar as we close out the week. So we'll start on the weekly chart as we always do. As we can see, bearish week, pretty much in the bag here. Still seeing sensitivity as we push further down. So not a whole lot of commitment as we've been pushing down. But yeah, that's kind of what's happening there. Go down to the daily. As you can see yesterday, as a result of CPI, we had quite the large spike to the downside as well, kind of to the upside as well. A lot of just indecision this week, really. If we just look at these candles, not a whole lot of commitment one way or the other. Again, as I said, it's more or less because we're reacting to, or likely reacting to, level of demand on the weekly, the daily. So we're fighting for control on just all time frames, pretty much, just to see what, we're going to pop to the upside, or we're going to start continuing to the downside, maybe into this level of demand, which is kind of this, in essence, more realistic looking level of demand. But yeah, so we'll see what happens there. Obviously, when we get in these situations, we're in these kind of reversal phases until we start to see the market, kind of shifting. Like if we look at how this candle was inside of this demand, large wicks to the downside. Not so much here, so maybe not the best example, but we do see the sensitivity that's forming as we enter the weekly demand zone. But yeah, let's take a look at news. What do we got on the docket for today? We have core PPI month over month and PPI month over month. So kind of similar to yesterday with CPI. This is just PPI. So what is PPI? It's the change in the price of finished goods and services sold by producers. Core is going to exclude food and energy. And PPI is just going to be the overall change in the price of finished goods and services sold by producers. And actual greater than forecast is going to be good for the US dollar in this case for this event. So if we look at core PPI, 0.2% is the forecast. 0.3% was the previous months. 0.1% was the forecast, or is the forecast for PPI, with a 0.2% prior month. So obviously if we exceed 0.1 or even 0.2 for PPI, and if we exceed 0.2 or 0.3 for core PPI, it's definitely good for the US dollar. If we kind of look at yesterday's CPI's numbers, all were better than forecast, kind of met previous, except year over year. We were a slight miss there, but either way, a pretty strong release for the US dollar. Obviously, unemployment claims was the main thing that kind of impacted that, with a little bit of a miss there. But yeah, let's take a look at the previous day's range. We'll look at it by weekday. We're going to be looking at New York sessions. So let's just go down to, we'll go to the M15 real quick. Put on our Edgeful market sessions indicator. And just to make this easy, we'll get rid of these two and just kind of look at, okay, we've broken the New York high. So we're looking at the New York session. That's the reason I pointed out New York high. So if we break the New York high, previous day's New York high, I should say, we have a 76% probability of closing bullish for the day. So that's definitely something to keep in mind. Oops, I didn't mean to press spacebar. Let's go back here. Let's change this to the full day, and then we'll just kind of do it all over again. And we can go to the daily chart now because that's fine. So we got an inside bar so far with a 67% probability to go bullish, break the high, 75% probability of bearish if we break the low. And when we think about that stats for just a second, it's fairly logical to assume that if we break the low, we're probably going to continue bearish because we've moved quite a bit to the downside. Similarly, for the upside, we are closer to the top side, so it's reasonable to assume that could happen. But you never know. The market has its way of doing strange things sometimes. But we do have news today. PPI, it's a little bit less, typically less volatile than CPI. But yeah, we could see something if something's totally out of whack for finished goods. Was hoping that would load while I was talking, but it did not. So we'll just take a look here. We do have, if we are looking at a bearish weekly candle, which I think we can all agree that this week is going to be bearish, unless, we move up another 50 pips. Totally not impossible, but probably not probable. So if we look at the bearish weekly candle, high of the week, definitely placed on Monday. So 38% probability there, which is the highest, definitely on point there. But if we look, there's a 50% probability that today will be the low, but it's hard to say. If not, there was still 31% probability it would be on the Thursday. When you factor in high impact news such as CPI, I would imagine that this is why Thursday also has such a high probability. So I would probably suggest that this is probably going to be where we fall this week. That one should be loaded. It is. Let's go. We're still in the daily chart. So we're in an inside bar right now. And what I mean is price action is just contained within Thursday's candle. So far, we haven't broken the high or broken the low. If we look at the probability, we have a 12% probability. Similarly, like Tuesday, and an 88% probability of actually breaking out of either the upside or the downside. So small chance of an inside bar, but as we've seen on Tuesday, even small probabilities can still work out. If we look at statistically for Friday, we have an 8% probability of an inside day. So this being an inside bar. So it's even smaller, which means a 92% probability that we're going to break out. But again, we've seen that small percentage play out on Tuesday. So that's just something to keep in mind. It's obviously broken the opening week's range, the Monday to Wednesday kind of range that's set there. So that gives us some insight in terms of the weekly close, all that good stuff, and what we could potentially anticipate for basically the end of the week, which we're kind of seeing come to fruition. In theory, we could also move this to a little bit of supply. We're just seeing this continued chain of supply as we're breaking lows, we're forming new supply. It's getting a little dodgy just with how corrective it is. We break a low, we retrace, we break a low, we retrace, we break a low, we retrace, we break a low, we've retraced. So we do have a supply chain, but it's getting super corrective. If we look in the past, we were very impulsive to the downside with not even seeing supply holding. Well, we got our wish in terms of seeing supply actually holding, but it's super frequent, which, does create the illusion that, we could pop up. Could we come into something like this and then continue to the downside? That is entirely possible. Of course, if we start to do something like this, and we start to see demand holding, that could cause this to fail, or even better, if we see something like this, creates a flip, and then that probably gives us some good ideas that this could fail, but we could even come into this and still come to the downside. So I don't like to over forecast too much. I like to live in the moment of what price action is currently doing. Just seeing that we're in weekly demand, this is what's happening. I'm not going to force longs necessarily, but if I start to see, supply failing and then we start to see demand taking control, then I'm more poised to look for longs in that regard. Because the biggest thing that we do and that we focus on, and I like to try to remind everyone as much as I can and just, talk about it as much as I can because I think it's important, is the core foundation of how we trade is focusing on the direction of the 4 hours. So as we can see right now, we are bearish. We are seeing supply in control. We're seeing demand failing to produce anything. So our pro trend that we're trying to follow is going to be this 4 hour chart. This is going to be our anchor time frame. This is, where the magic happens in terms of finding our highest probability directional moves. Obviously, it gets a little bit more difficult when price action is like this because of what's happening here, but we don't automatically force this because this could still happen because this is what we're following. So it's more about trading confirmations. How do we do that? We then go down to the 15-minute chart and say, okay, well, I know the 4 hours doing this. So now my job as a trader on the 15-minute is to find, okay, where's supply holding? Is that order flow aligned with the overall 4 hour chart? I would say it is. So if that's the case, what I'm going to do is I'm going to map out these 15-minute zones. And this is what we've been doing all week through the outlooks and the end of days and everything else, is just identifying all of these M15 supply zones because the 4 hour is bearish. And when price interacts with the 4 hour, or rather, and when price interacts with the 15-minute supply levels, this is where we're looking for trades. Why? Because it's pro trend and typically pro order flow. And you'll have heard me mention throughout the week unconfirmed and confirmed and even counter in terms of looking for trades. So if we take an example here on Wednesday, I had mentioned that this was an unconfirmed, Either it's a counter order flow. Why? Because demand was starting to take control here. We can see demand holding after we swept this low right here. So something was fundamentally changing in the market. So demand started to take control. So longs would have definitely been looking good, especially if this had failed, but it didn't. We tapped into supply. We broke the last point of demand, and then we started to create unconfirmed sells and then confirmed sells here. CPI kind of changed the game a little bit. Pre-CPI, we kind of took all of this as liquidity, but really nothing had changed too much. But even then, we could have said, okay, well, this is unconfirmed. This is confirmed, and allowed us to take these sells as well. And what you'll notice is I'm talking a lot on the M15 and bridging it to the H4, and that's what you should be doing as a trader. But let's take a look at a couple more reports from Edgeful just to give us a little bit extra flavor of how we're looking at things. You already know I'm going to talk about the Asian breakouts. If we look at the Asia session, we have a bullish Asia. We have broken and closed above Asia range, which is going to indicate that we have a 70%, 75% probability that we'll close bullish on the day. So we're seeing a lot of things stacking for bullish price action today, but again, that doesn't necessarily mean that we have to. These are just probabilities based on previous data. Every day is new data in theory. So we always have to kind of keep that in mind. We don't just trade because data suggests it. We put an edge around it. And if the data complements the edge, that's great. And that's even better for our trading. If we look at the market session correlation report, Tokyo and London, if we have a bullish Tokyo, we have a 64% probability of a bullish London. We are seeing a bullish London, so far that is in alignment. If we look at a bullish London, we would likely have an 82% probability of a bullish New York. Not that this one is going to be overly helpful for us at this point because we've already seen a break to the upside, but it's this statistic that we could keep in mind as well. From the Tokyo to London session, we have a 50-50 probability of a single and a double break. So in theory, we could see a New York session a break to the downside, and that would still be a valid move within the data set, which obviously creates a little bit different situation because then that would likely invalidate the bullish Asia range session because we broke into the downside. And we could see a bearish New York as well, because obviously if we look at this data, and we see that because that would change the London session to bearish, we would have a 72% probability that New York would also be bearish. And then we could flip side and go London and New York. We have a 59% probability of a double break and a 41% probability of no breaks. And as I've been alluding to in most of my end of days, New York has been just contained within London for quite a while. So that's always something to kind of take note of, that it's seeming like this data set is definitely taking the precedence right now. But that's it from Edgeful. Definitely some interesting stuff that we can use as we go into the New York session. So as you can see, we're breaking down lower. And then once we kind of break this point, we start to come up. We get a flip. Supply kind of fails here. As we can see, it takes out. Does it take out this one? Not quite, if I draw that on correctly. Kind of comes in, but we see demand holds, pushes up, creates a new high. And now we're kind of trading into an interesting spot. So you'll notice I had my zone kind of drawn like this. I just used the whole range to justify this, which, is probably a no-no in a lot of cases. But if we compare that with, kind of this, I didn't trade, this, for instance. I was looking more at this. And then, you could have looked at that, but that's later in the day. And I don't recommend trading at like 2 p.m., especially after CPI and news events such as that. The market is just going to kind of do that. So using this to kind of justify this initial kind of chain to basically give more confirmation for this trade, because this is, we could argue is unconfirmed. This is definitely more confirmed that supply is in control. Obviously, you could say that supply was in control the entire time, but you could also argue this giant wick swept all the lows here. Last point of demand kind of failed, or last point of supply rather. That would make way more sense. Last point of supply failed, but we did come right back into supply, which is basically this entire range. We kind of talked about this in yesterday's outlook, kind of potentially selling from here or the whole range, but obviously with CPI, not really going to touch that. But yeah, and then as we can see, last point of demand, that fails, taps into the range. We come back in, continue. Then instead of, reacting off of this and continuing to make a new low, get initial reaction, extreme of the reaction leg, failure, that forms a flip. We see demand hold, price continues to the upside. So a logical thing to kind of anticipate potentially is that this would hold. It does not. Do we get a body break? Yeah, we do. So what we can actually look at here is structural liquidity here, why this low took out this high. This low is also structural liquidity because it took out this high. So we have a couple points of liquidity, but obviously the lowest is probably going to be the most relevant in our case. This also does create a flip. Not that it really creates too much for anything of our purposes at this point, but what it does do, initial reaction, extreme reaction, like failure, we can pretty much just use this to justify the flip that we're currently in right now. We could also use kind of these wicks and say, okay, well, right now we're kind of caught between two zones. This supply and this demand, which is a flip. This is kind of just that ranging price action that we tend to see New York afternoon up until Asia. And then we get some volume pumping in London. So for me, if I'm looking for trades today, which I am, I would, in an all perfect world, I'd like to look for more sells because the sells make sense. There's a lot of data to support the longs. So, if we can keep continuing with this overall bullish momentum, there is an argument that demand is in control currently on the M15. Obviously, now if we say that, the H4 is bearish. So if I'm taking M15 longs, I want to make sure, one, demand's in control and that I've actually seen it hold. The only thing that I don't like about this is if we kind of look at the range we're trading in, it's basically this high to this low. So the kind of supply that's holding it is basically this. That's what we're interacting with. So obviously, and I don't have to rush anything. If we come into this, or even up here, doesn't really matter, and we start to see sensitivity, and on the 1 minute, there is a sell footprint that I'm looking for, I'll probably be more interested in the sell. Now, on the flip side, if we start to just do this and blast up, or even, and this is where the M1 model might kind of do some interesting things for us, is if we get that, and then that, that all breaks that, this could build into a flip that we could then look to potentially trade longs. Obviously, if we then go to the 4 hour, we see this supply kind of fail, then that could be the start of our larger 4 hour front leg. And again, then we would be kind of mindful of these areas as prices continue up, maybe even this, but this is probably your first true target, structural liquidity. Probably the best form of it because we actually get a body break. Everything else has just been kind of wick breaks, except maybe this. So the last point of supply that we're looking at, whoops, I went one too many, would be here, which is a point of structural liquidity. Why? Because this high broke this low. I mean, it's debatable actually because technically that high may have been formed during CPI as well. I think it did. No, it didn't. It would be this high. So that's fine. But either way, that's kind of how I'm looking at pound US dollar as we close for the Friday. Definitely not going to rush into anything. Next week is another week if I don't see anything that's super high probability. But yeah, that's it for me. I hope you all have an incredible day on and off the charts. And more importantly, I hope you have a great weekend. Take some time to rest, relax, recharge, journal your trades, review your week, and get ready for next week. Cheers.